Whoa, now it's your boy Lambo Drew, and you are now tuned in on another special edition of the Leverage Show. Y'all do not want to miss this tonight. I'm telling you what, it's going to be a great show tonight. I'm excited about this one tonight, man. My guy G is definitely getting ready to hit the stage, but before he get ready to hit the stage, we are excited to make sure that our guy definitely gets a warm welcome, man, here on the Leverage Show. So really excited, man, about this one, man. I'm going to tell y'all this one right now. You're not going to want to miss this one just because on the aspect of when we're talking about, man, the markets, we're talking about what's going on, why people are actually leveling up, especially this year, and people who haven't even leveled up yet. I'm telling you this right now, it's going to be a hot one. So make sure y'all are tapped in. A lot of y'all remember my guy G from Florida. If you were down at the Wealth Builders Conference event 2025 just 2 months ago, y'all remember G and got a chance to meet G. A lot of y'all was chilling on the yacht with G the very next day, which I truly thought was amazing. And G like literally came in and showed so many people so much love, man, that I really, man, am truly excited, man, about him. So before he comes in, we're going to make sure G is in the building doing this thing, man, and making sure that he gets set up, man, right, so we can go ahead and get y'all connected, right? So shout out to him, man, a really, man, coming rocking on the show. Before G gets on, man, we're going to talk about it a little bit, man, so sit tight, man, and we're going to make sure that we do this thing the right way tonight. Shout out to Miss Ingram. Thank you for popping on here. It was so good to see Miss Ingram in the building, man, right here. Like, I was truly excited to see Miss Ingram, man. I'm loving it. There go G getting this stuff together. It's so good to see G backstage. So yeah, before G comes on, man, it's gonna be great. Miss Ingram was down in Miami with G, literally having an amazing time. And if you guys missed it, I'm trying to tell y'all this right now. Like literally, G lit up the room, and then being able to explain the stock market and be able to explain how to do trading with so many people, I really just thought was second to none. But just the energy, the character, everything about him was just at a high level. And I'm truly excited, man, for my guy G before he hits the stage to really go ahead and break some amazing things down for y'all. So thank you, Ms. Ingram. It was so good to see you. Ms. Ingram, I really want to give a shout out, right, for Ms. Ingram, because I really think that this is important, right, before, we go further. So many times you meet so many people say, Lambo, man, I'm trusting you to help my journey, to help me out a lot better, to help me go forward in life, because I just believe, man, God just put you in my life so we can go on ahead and make this thing right. And I literally celebrated a huge milestone with Miss Ingram today, and I couldn't be so proud of her for definitely trusting Lambo, trusting our team to help reach those goals. And that's the biggest thing in life. You got to have a mentor. And that's why, G coming on here tonight, like being a mentor, a solid mentor for y'all and being able to show y'all direction is really getting ready to go on ahead and take y'all to another level. And a lot of y'all probably been waiting like, Lambo, we're waiting to figure out how do we go on ahead, and really level up in the stock market. I don't know anything. G makes it plain and simple. And Ms. Ingram got a chance to really be out there with G on that yacht, man, and said, Lambo, I really love it. And Miss Ingram can trade now, too. So shout out to Miss Ingram. Y'all better not go ahead and sleep on my people around here. Y'all definitely, man, know that the Leverage Show family is leveling up. All right, so definitely shout out to Miss Ingram. Good evening, Ken. You already know she's showing love to my wonderful wife, and my wonderful wifey is in the building. Y'all show love to my wonderful wifey. She could not wait to go ahead, man, and see this one too, man. I'm telling you, man, G just made his personal and pressure on all of us, man, down there. And that's been always heartfelt, man. And we always going to continue to show love. So you already know what time it is, man. I'm excited, man, about this, man. You know, all right. So thank you, baby, for you popping on here. Ms. Ingram showing love, man, to Mrs. Johnson. You already know. I miss you today, man. She's showing love, man, to my wonderful wife. Yes, she did. She sent flowers to her. Miss Janea is in the building. Miss Janea was down there, too, in Miami with my guy, G, man, out there on the boat. I'm trying to tell y'all, man, we had an amazing time. If you didn't see him speak there, he came, kicked it with us the next day on the boat. Even his homeboy, shout out to my guy, Big Mike Man, who was down there, man, kicking it with G, man, and really got the chance to kick it even after. It was like, yo, Lamb, G coming on the show tonight, I'm pulling up. I'm going to be on the Leverage Show. I'm going to make sure that my guy G and everything show some love. So thank you, Miss J, man. Shout out to all the love that you do. So good to see, man, you making the moves that you making. So proud of you, woman, man. Keep doing what you're doing. You know what time it is. Time to go ahead and flex up. She's showing love to Miss Ingram, man. She's lovingly showing love to my wonderful wife, man. Taylor showing love, man, back to Janelle. You already know my wife is showing back to Miss J. Let's go. Errol's in the building. Shout out to my cuz, man. New Orleans in the building, man. Taylor, Janelle, Miss Johnson, what's going on, ladies, man? You know that they showing love, man. Really appreciate you for that, cuz. Money's in the building. Shout out to your money, man. My wife showing love to Errol, man. Taylor showing love to Errol. My wonderful wife saying welcome, money. That go my cuz. Big Lawrence in the building. What's up, Bud, man? Good to see you in the building, cuz. Thank you for being you, man. You know what time it is. Let's grow, let's grow. Band-Aid for America. Thank you, Band-Aid for America. Appreciate you being out here tonight. Hello, money. Good to see you and everything, man. Ms. Ingram showing love. Ms. Ingram showing let's go. You know what time it is. Ken Haney is in the building, man, showing love to Taylor. Listen, I know, Ken, and before you get started, I know Ken Haney, you guys, if you guys didn't know Ken was the host, man, for the amazing event. That truly was a great time down there. He got a chance to go on ahead and be there. Ken, I seen you comment the first time. Him and G yesterday was on the phone together, man. Really being able just to relax a little bit, kind of catch up on some things and really have an amazing conversation. So he's excited. I know he was going to come out here today to support his guy, G. That YouTube algorithm strikes again, he says. Yes, it does. It definitely strikes again. I seen your comment up there first, Ken. Ken, you must have was right there when the notification bell went through and was just like, G's on here. What's up, everybody? You know? So shout out to you, Ken, man. Thank you, Kid Haney, for doing what you do. Make sure you guys are getting ready for the event next week in Groveport. The Fill the Bag golf event in Columbus, Ohio, in Groveport. Even if you are not there, you guys can sponsor. They Fill the Bag, do a sponsorship. Really is amazing. Make sure you guys go on ahead, man, to Ken's page and show some love and go find out how you guys can be a part of that amazing event. Janae showing love to Errol. Ken showing love to Miss Taylor. Julie is in the building. Shout out to you. Julie was there. She got a chance to speak, man, as well. E-commerce, killing it. And was on the boat with G as well, man. So shout out to Miss Julie, man, doing what you're doing. Thank you, you and Jeremiah, man. I love y'all too, man. J50 and J-Dog, man, that's what it is. Ken for the win-win-win. Yes, you already know what time it is. My mother-in-law is in the building. Shout out to Miss Williams, man. Hello, family. Thank you, Mom Dukes. You know, definitely popping in here. Janae is in the building, man. Ken showing love. You know what time it is. Julie showing love to Mrs. Johnson. Janae showing love to Julie. Boy, y'all are in the building. Thank you, Janae. I love the chat. Keep that energy up for my guy G, because y'all know what time it is. Miss Taylor's got that top spot lady. Yes, she did. Miss Janae, man, you know what time it is. The money team in the building. Y'all already know what time it is. Just getting ready to go down tonight, man. So make sure you guys are in there. The money is in the building. Yes, money is in the building. Congratulations, Taylor. Kenny Haney, man, and Noah, the connector. Yes, they have been amazing. Hopefully, I don't know if they're going to be down for the mastermind. If you guys are going to be down November 1st for the mastermind in Miami, you guys make sure it's a yacht mastermind. I know my guy G is going to be on the boat. So just him having a time and session with y'all one-on-one in the mastermind, I think is going to be worth it. Bring your pads, bring your pens. Like, listen, this is the mastermind in Miami, November the 1st, is not an event for you to come down there and want to be cute. is for you to come down there and really want to network and soak in all the knowledge in the game and the connections that is going to be down there. But you're going to have a nice time too. G's going to be on that boat, and he's going to be definitely having a session with y'all. So make sure and everything. We're going to try to see. We're going to ask G on the show tonight if he can probably get some Saturday sessions with y'all in the market that we can do some really live trading for y'all, for those and everything, man, who really want to go ahead, man, and level up. I'm trying to tell y'all this right now. It's going to be an amazing time, man. We got everybody, man, who've been hitting Lambo up today, saying, Lambo, we trying to be at that event. The Yacht Party Mastermind, man, with you, man, November 1st in Miami. Literally is going to be a hot one. Y'all don't want to miss it, man. Ken Haney showing love, man. Shout out to you, man. My sister, J50. You better be showing love, man, to J50. I love that. Noah the Connector. Thank you, Lambo. Happy to give Taylor those flowers for that top spot. Keep bringing it. Y'all better keep bringing it, boy. The chat is on fire today, boy. Y'all love G. Y'all must knew G was coming on and just said, yo, we going to show G some serious love. Like Miss Julie said, we got work to do. Yes, we do. That's favorite saying, man. We got work to do. Ain't no time and everything. I'm going to tell you something. If you watch Prime Time, if you watch Coach Prime, the Colorado Buffaloes, he's all players in the world because they a little bit suffering over here in Colorado, man. But Coach Prime, man, he used to say on that, are you working or you twerking? It's either one or the other. Either are you getting to your goals or you're getting on the pole. It's either one or the other, right? And so I want to know, are you working or you twerking? So make sure you are working and you are working towards your goals to get to where you need to go to your life. Lawrence, what's up, cuz? Ken Money, man, Bandy from America. Welcome to the show. Yeah, definitely welcome, Bandy, to the America, the show to everybody, man. Ingram showing love to Ken. Ken showing love. Shout out to Errol. Blessings, Miss Williams. You already know. Julie, I hope that everyone is having a wonderful day. Man, I definitely know that they are. Hey, Miss Williams, man. Shout out to Miss Williams, man. Y'all better shout out my mother-in-law in the building, man. You know how that is. Money showing love, man. Hello, everyone. Shout out to you, Money. Thank you for being in the building. My cousin showing love back to Errol. You already know. Buffoon, you already know I'm just playing. Shout out to you and everything, man. Miss J, thank y'all for being in the building, man. Truly, truly, truly a good time tonight. Listen, that has been the chats, man. I mean, y'all have definitely lit this thing up like it is supposed to. But it's also, man, that time where we have our guest of the honor to definitely hit the stage for the first time. This man, I can go on and on and on, man, about how we actually met, but also the connection of my guy G and everything that he's been doing to really help level up, man, people. But I'm so proud of him today for taking this invitation and showing up right here to the Leverage Show for the first time. I'm telling you what he did down in Miami definitely needed to be applauded because he truly went on ahead and gave so much value of him being in the room. And tonight, you're getting ready to hear the journey, the story, and how this gentleman is really being able to take you guys to the next level by any means, and getting there to that next level. Allow you guys to make sure that y'all are at the next level and at the highest. By all wonderful rounds of applause, we welcome to the show for the first time, my guy, the stock trading master, my guy G. What's up, G?
How you doing, my brother? How you doing?
Life is good, baby. Welcome to the Leverage Show, G, man. Good to have you back. Good to see you again, man.
Good to see you as well, my brother. How are you?
Life is good, brother. You know what, man? Yeah. We really can't wait to go ahead and hear what you got to say. They hear enough of what Lambo got to say. They want to hear what G got to say, man.
Absolutely, you know? absolutely. Blessings and greetings to everybody here. As Lambo said, we had a beautiful wealth conference down here in Miami. And I end up teaching on the spur of the moment, but it was such a beautiful timing that I was able to give a lot of valuable information that was passed on to me, and I've been able to pass that on to everybody else, right? Yeah. And without further ado, let's go ahead and jump into stocks, right?
Yeah.
First and foremost, a lot of people think that stocks is gambling, right? Greetings, Janae. Greetings. So a lot of people think stocks are gambling, right? And they think so because they have no idea really how the stock market works, right? And what tends to happen is that people will jump in the market. They don't know what, they're just going to throw their money at the wall, expecting it to make money over time. And as a result of that, they don't really make any money, right? Or they go off of YouTube, or some friend says, hey, go invest in this. And then all of a sudden, prices drop, they lose their money, they panic, and then they pull their money out of the market and they lost money, right? They get discouraged and say, you know what, I'm not doing that no more because it don't make any money. And the truth is, it does. It's just you have to know and understand how to make money in the market, right? Now, you will hear a lot of people talk about day trading, right? Day trading does not make the money that people think it makes, right? And I will show you some statistics here. If I can share my screen.
Yeah, just hit that share button at the bottom and boom, you should be able to pull it up.
Right. And hopefully you all, because I cannot see the presenter stage. Hopefully, is everyone able to see my screen right now?
Yeah, we can see your screen. You're good.
Okay, perfect.
I can't see your screen, but hit the present button at the bottom. It should be like a plus button. You see like a screen with a plus button that says share?
Let's see. Let me go to different windows. I have to allow, there we go. Security, you gotta allow certain things. All right.
Okay.
Allow. Later. It's not allowing me to share my Excel screen. That is interesting.
Would it let you share? Does it let you share another screen though outside of that, or?
It will. I have to restart Chrome, and I don't want to do that in the middle of the. Okay, so that puts things at a disadvantage here, but I'll go ahead with the Yahoo Finance, because what I was going to show was some statistics. I typically don't operate in Google Chrome. I usually use Safari. I'm here on my MacBook. But the statistics that I was going to show you was why day trading was not feasible. And it was because the returns for a asset is usually very low, right? Very, very, very low. We're talking maybe 1 to 1.5%, right? And it's not feasible for any asset, whether it's stocks, options, futures, Forex, right? And there's probably going to be a lot of people on here who has experience in Forex and say, well, no, I've made a lot of money. Well, there's a difference between making money and being profitable, right? Because being profitable is where you're consistently earning profits over a period of time, right? Because you can earn 10 grand in the market and then lose $20,000, right? Sure, you can market that, hey, I made 10 grand in the market, but truly you're not profitable because you lost 20 grand of it. So you lost the percentage that you made, plus you lost an additional $10,000. Now, when it comes to investing, first and foremost, you have to understand stocks. Stocks is kind of the central point of all investing and trading, right? And there's a couple of things you need to know about stocks. And the first things first is, well, how do you look up a stock? Well, one of the best sites that you could use is Yahoo Finance. Right, it's one of the absolute best sites there are. There are others like Bar Chart, and TradingView. We can go and look at the charts, but Yahoo Finance is pretty much industry standard, right? So you could go in and you can look up whatever publicly traded company there is on the stock exchange, right? And our US stock exchange is the NYSE, or the New York Stock Exchange, right? So when you hear Wall Street in the news, that is what they were referring to, okay? So you can come here, and as you see, you have the different symbols, right? Those symbols are called tickers, right? So for example, let's look up Tesla just because it's here. So we can go then and look at Tesla, and there's a couple of things you will notice, right? There's first thing you're going to notice is the price, right? Currently, what this means is that Tesla's share price is worth $436 per share, right? So meaning if you paid $436 to buy a stock of Tesla, you would get one share, okay? This part that you see over here, this section shows the dollar amount that this price has changed. So overnight, right, it has gone down by $23.46. And this shows that drop in percentage, right? And then, of course, this was at time of close. So at close at 4 p.m. And this is the overnight price, because right now the Asian session, in other words, the Asia side of the world starts trading as well, right? So the market closes at 4 and it opens back up at 6 p.m. with a different session. The US session is from 9:30 to 4 p.m., right? And depending on the platform, you can trade stocks nearly 24 hours a day. All right. Now, first things first, you need to understand how to read a chart. And this is the basics, very basics of understanding stocks. I'm going to try and get this full screen for you all. And I'm going to change something here. I'm going to change this to candlesticks. And I am going to try and get rid of that part. Okay. Now, when you look at an asset, whether it is a stock, whether it is crypto, whether it is futures, bonds, gold, whatever it is that you're looking at, they are all going to look similar. All of the charts are going to look similar. Okay. Right now, you're probably looking and saying, this looks like gibberish. I don't understand any of this. I guarantee you by the end of this session, you will be looking at charts like a master. Okay. Because they're all set up the same. So on the right side of the chart is always going to be the price. So the price of the asset is always going to be on the right side of the chart, okay? At the bottom of the chart is always going to be the time, okay? No matter what chart, what asset, what price. What stock or asset that you're trading is always going to be set up this way. Now, some platforms will have these options at the bottom, some will have it at the top. But these will change. This is the 1 day, this is the 5 day, this is the 1 month, 3 month, 6 month, year to date, which means from January 1st up into today's date. 1 year, which is from the date of today to a year ago in 2024. I think it's October 2nd. So it'd be October 2nd, 2024. This goes back 5 years, and this is the all time. So when that stock or asset first became publicly available to current day. So right now it is set to 1 day, right? You can obviously change all these and it will change the information within the chart, right? So I'm gonna keep it at 1 day for now, and I'm gonna zoom in a little bit. Right? Because you're probably wondering, what are these red and green things on this chart? What are we even looking at? Well, these are called candlesticks. Okay. They are called candlesticks. And this is how we kind of read how price is going. Green candlesticks, all of these green ones here, represents price going up. Okay. And let me see if I can actually get rid of that at the bottom so it make it easier to read. All right. So green candlesticks, right, represents price going up. I'm gonna zoom in a little bit more so we can get more in depth with candlesticks and how they work. Let me find a good one. Let's do this one. All right, this one, actually we could do this one here. All right, so green candlesticks represents price going up. Red candlesticks represents price going down. Okay, now, once we put all of this together, and I'm gonna do a review, right side of the chart, price, always going to be price. The bottom of the chart is always going to be time. Now, when you put all of this together with the green candlesticks represent price going up, red candlesticks price going down, what we can then say, and I'm gonna start with this candlestick, is that at this time, and you see the time at the bottom, on October 2nd at 1:33 p.m., price went from 445.79, if you look over where the price is highlighted, and it went up to 446.59, right, within 1 minute. So the intervals here are 1 minute. So each of these candlesticks represent 1 minute of time. This can also be changed to several minutes, an hour, 1 day, etc. Right? But right now it's set to 1 minute. That means each candlestick represents a minute of time where price is either increasing or decreasing. Okay. Now, with green candlesticks, the opening price always starts at the bottom. So what does that mean? That means at 133, price will start at, if it is increasing, it will start at the bottom. This is called the candlestick body, right? So it will start at the bottom of the candlestick body. And as price increases, it will continue to gradually increase until the 1 minute time frame is up. And then once that 1 minute time frame is up, or whatever interval that we have it set at, it will then stop at the top of that candlestick. As you can see from here to the right, 445.82 up to 446.56. So in 1 minute, it increased from 445.82 up to 446. Now, at 134, as you could see at the bottom, same day, 134, price went down. Now, on a red candlestick, price starts at the top and then ends at the bottom, right? Because it is a representation of price dropping. So in that 1 minute interval, price went from 446.59 down to 446.22. So it dropped slightly. And then, of course, you see a pattern of these red candlesticks where price continued to drop from here, 446, down to 443. Okay. And this is the gist of reading the charts, but this is only the beginning, right? Only the bare beginning. Hopefully this makes sense to you all. If you do not understand or you have any questions, Lambo, please let me know if there's any questions in the chat box so we can get those questions answered.
I'll keep you posted, G. Go ahead,
Absolutely.
do your thing.
Absolutely. So again, we can change this interval to whatever we want. I typically stay in the hour time range because that works better for me. Again, once we put all of these things together, we read the chart as such, right? Well, let me actually go back down to 1 minute, right? From wherever we start, how we read this will say, okay, at 3:07 p.m., price dropped from 443 down to 442, right? The next minute at 3:08, price really didn't do anything. It just kind of stayed where it was. Price at 3:09, price kind of dropped a little bit. 3:10, it didn't really do much. 3:11, price slightly increased. However, 3:12, price dropped some more, right? So we're putting all of these things together to understand how to read the performance of this particular asset, which is Tesla, right? We're looking at the price fluctuation. That is the beginning part of understanding how to read a chart and understand stocks, right? But it goes further. And the furthering part is where we start to do analysis. And this is usually the part that kind of trips people up because they don't understand what any of this stuff means. For example, a PE ratio or EPS, they don't know what that stuff means. So when we conduct our analysis, it is what is called fundamental analysis. Essentially, we are asking ourselves questions about this company. For example, if someone was to come to you and try to sell you a business, hopefully you wouldn't just buy that business just outright, right? You wouldn't ask any questions. They just said, hey, here's this business for $1 million. And you decided, all right, I'm just buy this business. Hopefully you wouldn't do that, right? Typically, you're going to want to know some answers, right? So you're going to ask some questions and you're going to want to know something, right? Well, what does the business do? What is it into? What industry? What sector? What product? Is the business making money? Is it profitable, right? How long have you had the business? And is the business sustainable? Is there any debt that this business owns, right? These are all the questions that we ask ourselves when we trade and invest in stocks, okay? Because what I want you all to think about is that trading and investing in the stock market is you are in the business of buying businesses, okay? When you buy a stock, you are a part owner of that company. Now, you may not be a majority shareholder or a significant shareholder where your vote or word may matter, but you are nonetheless still an owner of that company, right? So you have to want to know what is going on with this business in order for me to even put my money into it and become an owner, right? And when you take that mindset, it will start to make a lot more sense because now you can ask the questions of, hey, sure, somebody's telling me that this company or this stock may be doing well, but now you can go in and say, let me ask the questions. Is this company actually profitable? Are they coming out with a new product, a new service, etc., right? Because all those things will affect the price. So when we do our analysis of stocks, and this is just the summary, I am going to go in the financial section. There is 3 different types of analysis that needs to occur. The first is the fundamentals. The second is the qualitative, and the third is the technical. And I'm gonna start with the first portion, the fundamentals. Fundamentals, we are looking at the financials. So you would go on Yahoo Finance, right? Go under whatever asset or whatever stock it is, and you would go to the sidebar or side menu here and look at the financials, right? This will give you the income statement, balance sheet, cash flow, and if that company pays out dividends, it will show that as well, right? And you can look at this from an annual or yearly basis or quarterly, right? So I tend to like to look at it from an annual because I want to get a full year understanding of what this company is doing. So first and foremost, I'm going to look at total revenue. right? And TTM is essentially the estimated, right? This is what it is estimated to be, and then all of the numbers on the right are what it actually was in those given years. Okay. So it was estimated for Tesla in 2024, they were estimating $92.7 million. They actually exceeded that and made 97.6. That means that's a good sign, right? That means they're actually hitting above their benchmarks, right? These is their benchmarks or their estimates, right? Cost of revenue, they were expecting it to be 76. Cost of revenue means how much money did we spend in order to make money? Their projections were 76,000. It was a little high, right? Which is typical sometimes. Gross profit is of the money they made, how much of it was actually profitable? They projected to be 16 million. They actually made 17 million. Again, this means that it's better than they're hitting above their benchmarks. It's better than what they actually projected it to be, right? So I would go down first and foremost through each line of these to see, are they above or below what their estimates are, right? And there's going to be some mixes. There's going to be some that's above, some that's below. Overall, I want the majority of these things that are positive to be above, and that which is debt to be below, right? For example, total expenses, things like cost of revenue down here. There are specific things that you need to look at. That is a bit more advanced, and I would host another class specifically just on the analysis of financials. But basically, we go through these and look at what's going on with the company, and what we want to see is growth, right? That is what we're looking for. Is the company making money? Yes. Is it profitable? Yes. Those are good signs. That means whatever product or service they're providing is a strong product, and it probably won't go anywhere anytime soon. And that's a good thing, right? We also look at the balance sheet. We can look at the cash flow, which is a good thing to look at because this shows how much debt they actually have, right? If a company is tremendously in debt, their cash flow or cash revenue performance is not going to be great at all. And that would be a company that you would not want to invest in, right? Just like, again, going back to the example, if somebody tried to sell you a business and that business was never profitable, it's losing money continuously, common sense will say, you know what, I'm probably not going to buy that business because it's not profitable. It probably won't be profitable, and I'm just going to waste my money, right? The same idea goes.
All right. I think that my guy should be going on ahead, man, and coming back. It looked like we lost him here, but hopefully he'll be coming back, man, soon once everything actually comes back up. Shout out to you guys for definitely seeing. Let me go ahead and switch this up. Seeing, man, my guy G, like really giving a lot of game to y'all and really showing y'all on the charts and really bringing some things down. I know a lot of people, this is probably their first time, and for those who have probably been in it, it's probably like, hey, man, Lambo, I haven't seen this or nothing like that, or I'm not used to this. So kind of seeing this from how he's presenting this is really amazing. And so we're going to go ahead, man, and continue to keep letting him do his thing in just a few when he gets back in, right? But let me know, man, in the chats, are y'all loving the information right now that my guy G is presenting, man? Put some fire emojis in the chats, man. Let Lambo know, man, that y'all are definitely in the building and y'all are loving this content right here tonight that G is definitely bringing, man, to the Leverage Show. Truly and everything, man, I'm trying to tell you this right now. It's going to be an amazing time, and he's consistently prepared well for this tonight. But I just want to take the time, man, shout some people out, man. I see, thank you, little bro, man. I see you in here. My guy, JJ, in the building. Shout out to you, JJ. JJ is our pecan candy guy who's been really killing it and stuff like that. So shout out to you, JJ. Thank you for being in the building. Miss Ingram, man, showing love, man. Appreciate you for definitely. I know she was going to be in here. She's a stock trader, so she continues to keep trading, man, more and more, man. And she's into all of these communities. Shout out to my cousin, man. I really appreciate you, man, for you showing some love, man, in the building. Thank you, Boog, man, for you doing what you do, brother. Shout out to you, Mike, man. I see you in the building, man. You told me that you definitely was going to make it out here tonight, man. Really appreciate you for that, man. Thank you, brother, for popping on here. My guy, T. Mosley, man, in the building, man. You already know T was going to make it in the building, man. Appreciate you, my brother, man, for you being on here, man. Stopping in here tonight. PC, thank you, man, for you stopping in here. You and T, man, I really appreciate it. They were down at the event when G actually got a chance to speak to as well. So really appreciate y'all, man. Thank T. Mosley, Mike, and P. All of them were down at the event in August. Make sure you guys don't go on ahead, man, and not get your tickets for the November 1st mastermind, the Yacht Mastermind back in Miami. So you guys definitely want to go ahead and do that. November the 1st, we got the Yacht Mastermind. It's a one-day event. So meet us down there. We're going to have an amazing time. All right, G is back, y'all. So let me go ahead and bring him back to the stage. All right.
Oh my goodness. I didn't even know I lost you guys.
Man, you lost, brother. You was all in it, man. I said, this is good, G. So I'm gonna let you get back, man, to doing what you was doing. You was surgical around here, brother.
All right. Can you tell me the part that I left off of before my Wi-Fi decided to do what it was doing?
Before the Wi-Fi decided to do what it was doing, I think that I'm not even gonna lie to you, man. It was surgical.
No worries. I can go back over it.
Go back about 2 minutes before.
Okay, no worries.
2 minutes before. Okay.
No worries. I'll share my screen again. Go back to Tesla here. All right. I'll because I don't know where I left off, so I will go back to the chart and I will start back from the charting aspect.
You were around that aspect. So yeah, that one thing I know for a fact.
Yeah. So for beginners, this is going to look like chicken scratch, right? Because you're going to see, well, what in the world does all this stuff mean? And it doesn't matter what asset, what stock, doesn't matter what it is. All of the charts are set up exactly the same. So on the right side is always going to be price. Always, right? On the bottom of the chart, it is always going to be time, right? And different platforms will have these options either at the bottom or at the top of the chart. But here you can change the interval, meaning that right now, being that it is set at 1 minute, each of these candlesticks are at 1 minute intervals from each other. As you can see down and below, it says 341 and then 342, 343, 344, so on and so forth. You can change that to several minutes, 15, 30, an hour, or so on and so forth, right? But let's go into the candlesticks because there was something that I didn't quite go over with the candlesticks that I needed to. All right. And I'm going to use this one and I'm going to use this one, being that they are sort of bigger ones. All right. So green candlesticks represent price going up. Okay. So the bottom of the candlestick of a green one is where price will start at whatever interval that you have set. Okay, so if it is a 1 minute interval, it will start at exactly 301 or whatever time frame that you start looking at the market. It will start at that 1 minute interval. And if you look to the right where it's highlighted in white, that is going to be the price where it starts, right? 441.29, right? Or $441.29. Because it is green, it is representing price going, or price has gone up, right? In real time, it will increase, and as it increases, you will see it becoming green, or if as it decreases in real time, it'll turn red, right? But it starts at the bottom, and then as it increases, it will then close at the top here once that 1 minute interval is over, right? So these are all 1 minute increments. So from 3 o'clock, right, starts at 3:01. Price will rise, or fall, or whatever it's going to do. In this case, it rose. And then at the end of the 1 minute interval, it will stop at the top, right? And it rose from 441. Let me get the right price there. I think it was, yes, 441.33, and increased up to 442.92, right? Red candlesticks does the opposite, right? Because it is expecting the market to drop, right? So instead of the bottom, it starts from the top and then goes downwards, right? Because it is representation of price dropping. So at the top, we got 443.33 where it was before, and then it dropped back down to 442.03, right? So how we read this overall, we put everything together and we say, well, at 3:01, price increased from this point to this point, right? And we continue to do that. If it's all green, we know price is gradually increasing over time. But here, the red, well, price is dropping over time. Okay. And once you see these kind of, when it's sideways, we call that two things. We call it the price is trading sideways, or we call it consolidation, right? Because what that means is that buyers and or sellers are not willing to come to an agreement, right? Meaning buyers cannot drive the price up, sellers cannot drive the price down. They're kind of stuck in a little stalemate, if you will. Now, before I get into buyers and sellers, I wanted to get into what the wicks are. So just like a candlestick, an actual candle, you have the little wick, right? The part that you light. Well, there are those lines on these candlesticks that we refer to as wicks, right? For example, on this one, and I'm gonna zoom in a little bit more, right? What this represents is the lowest price that has occurred in that time frame and the highest price. So right now, the highest price, it was 440.96, right? Although the body of the candle is down here. Remember, I said when a whatever interval, it starts at the bottom or the body of the candlestick, and then it will either drop or increase. Now, price will do both in some cases, in which this candlestick, it did, right? It dropped first, but then it rose back up all the way up. And I'm going to move this cursor over. It moved up to here. And then at the end of the 1 minute interval, price dropped down slightly and it closed there, right? And the same thing will occur with the red candlestick. But basically, that is a representation of the highest and lowest price that occurred within that time frame. Okay. Now, let me explain to you what actually affects price movement, right? Because I've talked about price going up, price going down, but how does price move? Well, there's two factors here. The first factor is supply and demand, right? If you know anything about economics, which I strongly recommend, you learn both micro and macroeconomics and learn statistics, right? Those are the three core foundations for investing and stock trading in general, or asset trading at any point of the capital markets, right? You need to know those three things. But demand is the absolute factor when it comes to price, right? High demand means high price, low demand means low price, right? And then, of course, supply then compensates for demand. So when we read the charts, we are looking for instances where demand is high or where demand is low, right? And in this particular chart, let me go here. Let me start here. So if you see here, you see that price is gradually decreasing, right? All the way down to here. It from this point down, it is just dropping off. What that tells me and shows me is, see if I can highlight it, or I can't highlight it, but there's this section, this little section right here that shows me that demand is dropping, and because demand is dropping, so is price, right? And demand usually drops when there is a massive sell of a particular asset, right? So in this case, there were a lot of sellers who were either selling their individual stocks or selling a wide basket of their stocks, right? And as a result, it is dropping the price down. This is good for buyers because they can then rebuy that stock at a lower price, right? And once buyers enter the market, the demand rises again, and that affects price directly, and price will increase, right? Now, the market term for both of those are trends, right? There are uptrends and downtrends. Uptrends is where demand is high and buyers have control of the market, as you would see in this little nice green section here, right? From here to here, there's a nice little slight uptrend. That means buyers were controlling the market or buying up this asset, which in turn drove up price. Okay. And then in these situations like this, these downtrends, they were being offloaded. Usually what that means is that they were making profit. Whoever bought at a certain price, they were making profits, and then they sold off, right? But chart reading is one of the basic parts of stock investment, and really you don't have to worry too much about reading your charts until the technical analysis stage, right? And that's usually the last part. The first part you really want to look at is the financials, right? So on Yahoo Finance, the same thing. You would go under the side menu section here, and you look at the financials, right? And I'm not going to go through every single line with you all, but the basic information here, you look at the income statement, you look at the balance sheet, cash flow, and what you're looking at is you're trying to determine whether this company is profitable, whether they're generating revenue, and whether they are actually sustainable, right? You don't want to see a lot of debt. You don't want to see negative returns or low revenue income, and you don't want to see low profitability, right? Low profits. That is a sign that that company is not doing well financially, and that is something that you don't want to invest in, right? Again, we want to think of stock investments as we are in the business of buying businesses, right? So if someone was to present a business to you, you're going to want to ask questions about whether that business is profitable, what market they're in, what product, services, right? So those same questions that you would ask that individual, the same thing you need to ask for the stock market, right? And then we can visually assess that. So once we go through the financials, we would then get into qualitative analysis. And qualitative analysis is where we check market sentiment, right? How do people feel about this particular stock or this particular company, right? Or the leadership, for example, Elon Musk, right? If you all could remember back a little bit, that Elon Musk was in the news quite frequently, and it was very, very, very negative, right? And as a result of that, the price of Tesla was starting to take a hit because of it, right? So that it was due to the qualitative analysis, right? People were not feeling so great and comfortable with Tesla as a company. And as a result, many people started selling off their stocks. And as they were selling off their stocks, it dropped the price, right? And as a CEO and majority shareholder, Elon made a good decision to back away from the media outlook, right? Before his company took too much of a hit. Right, but here we will look at how are their earnings going. And right now, they're not doing too well in earnings. They're missing their mark consistently, which is not a good thing. We can look at their revenue share, revenue versus their earnings. So they generate quite a bit of money, but their earnings is not great. And the earnings is actually what they keep. So they're generating in quarter three, or let's take it to 2025, but quarter three of 2024, they generated $25 billion, but they only kept about $2.5 billion off of that, which is not great, right? So quarter two of this year, they generated 22.5 billion, but they only kept about 1.4 estimated billion. So their earnings to revenue is also not so great, right? This is kind of a heat map of analyst recommendations on what you should do. These aren't 100% accurate, and there's not necessarily anything that is 100% accurate, but these are some suggestions, right? If it's dark green, strong buy, hold, the stock is underperforming, or they're just telling you to outright sell it, right? And whatever color is the most dominant in this is the one that you go, or is the one most suggested, right? So right now they're telling you to pretty much hold. And that is because they are determining or estimating that the price will drop from $436 to $345, right? Which is actually a good thing, right? Now, let me ask you all, where would you rather buy Tesla stock? Would you rather buy it at $436 or $345? Which one?
I'm saying 345. I'm going 345 the lowest.
345, right? Because you always want to buy low and sell high, right? So when markets are dropping off, for example, you see things in the red like this, that is not always a bad thing. Oftentimes it is an opportunity, right? Because you will be able to get that stock at a far cheaper price. So if I was to think, all right, I'm going to invest in Tesla, well, I'm not going to invest right now because it's high, right? It's at $436. Right. And according to market analysts, they are determining that it may drop down to 345. That's almost $100 difference between these two. Right. I'm going to save some money. So I would wait until price dropped, and then I would buy low. Right. So even if it did come right back to 436, I would have made profit from this point to this point, just from price going back to where it originally was, right? You also want to look at the earnings estimates, what they were estimating earnings to be, revenue estimates, what was the history. And again, like I said, I'm not going to go through every single line because it is a lot, but you definitely want to get a full market sentiment of what's going on with this particular stock. Some of the top analysts here, they list what the scores are and what their ratings are. Overweight simply means that the stock is overbought, right? There's too many buyers. And what tends to happen is a market correction, right? That means that price is higher than what it's supposed to be, and eventually it will drop down to where it's supposed to be. For example, right now, maybe it's at 436. Analysts are suggesting that it's more so supposed to be along the lines of 345, right? And it'll drop. Okay. Some, however, are saying that you should buy. It's outperforming. Some say it's overweight again, right? Outperform, and overweight. All signs that price is actually slated to drop sometime soon, right? Within maybe the next month to 3 months, price should be dropping, right? And if that is the case, right, then I would want to look at this and say, well, if price drops at a certain point, that is where I'm going to enter. For example, if it drops down to 276, you can best believe I want to buy it at $276, right? Because if it goes back to $436 where it is now, I made money, right? And then the last part is where we get into the charts, right? But I did that first so you understand how to actually read a chart. But the last stage is entry, right? And that's where technical analysis is. And that's where you get into learning where those supply and demand zones are, where, let me see so we can go back to the chart here. All right. So you can see where those supply and demand zones are. Other zones are the resistance and support levels. Resistance level is where price has gone to the most recent high, right? So whatever the most recent highest price, that is going to be a resistance zone because it is the highest point that buyers were able to get the price, and then eventually sellers took control and dropped it, right? And it couldn't go past that point. And I'll show you what that looks like here in a second. All right, so I'm gonna go back to our chart here. And I'm going to make some changes to our chart. So I'm going to go to a month time frame. And I'm going to keep the intervals at 1 day. So each of these represents a day. And then I'm going to zoom out, right? I'm going to zoom out for a little while, right? So as you can see, the different months. So if I was to look at this chart, and I'm going to go on my draw tools here. See, horizontal line. I'm going to scale out of this, right? Because I want to get an overviewed picture of this asset and its price movements. So actually I would do it all time. Let me do all time. That'll work better. So this is all time. So as you can see, Tesla started somewhere around here, and then it gradually increased. So far, the highest priced Tesla has ever made was $489, right? So there's a couple of zones that I would do when I would select or highlight when I look at a chart. The first is, what was the highest price this stock has ever reached? And I would mark that as the resistance zone. I would change that color to red, right? And then I would what is the lowest price? So lowest price was somewhere around here, right? So now I have the highest price, the lowest price. This is what we would call as a resistance level, right? Or another term for it would be our ceiling, right? Price has not been able to yet go past 489, right? It has hit that and it dropped back down. It is not passed off of that. What tends to typically happen is price will get close and then it will drop off. Not always, but in many cases that would happen. As you can see here, right? Price kind of climbed a little bit, got close, but not enough to where it could push past and it dropped off. Okay, same thing for our support. This is going to be our support level or our floor. Now, there are going to be many different support and resistance zones throughout, right? But these are the overall. Another support level would be here, where price drops and then rises again. So our lows, our most recent lows would be our support zones. Our most recent highs will be our resistance areas. Now, those are all important because it is the determinations of where we should make our entries, right? It is not truly feasible to quote unquote time the market, but what we're doing is not timing the market, but positioning ourselves, right? So we want to take the data and we want to compress it enough to where we can get a good entry. And that's what we want. We want a very good entry. For example, if I was to enter the market down here, that would make a lot. Let me see if I can draw. It would make better sense, right, to enter the market down here, right, somewhere down in this area, than it would to enter the market up here. Why? Because if I enter the market down here when it's only about $100 or so, that means I have the potential to make a lot more money, right? Now, why would I enter the market down here? Simple, because the market has already been there before. It has already traveled up to $400 at this point, and this was in November of 2021, right? So if I bought it down here, well, it's most likely, if the company is still expanding and growing and doing great, that the price is going to get back up to where it was before. So I just bought it exceptionally cheaper. And if I bought it here at $100, from here to anywhere up here, I just 4x'd my money, right? By just simply buying at a cheaper price, right? From 100 to 400, I 4x'd my money. So if I had $1,000 that I invested into it, I just now came out with $4,000 or $3,000 profit, right? And it only gets better the more money you invest, right? $10,000, you now have $40,000. $100,000, you now have $400,000. 1 million, you now have 4 million, right? So in these ways, you can see how you can double, triple, or even quadruple or more your money at very intelligent investing areas that you plot on these charts. And that is what we do during the technical analysis, right? We are plotting where we want to do business, where are we wanting to enter the market, right? I would rather enter when the market is cheaper than enter when it is expensive. It makes no sense, right? Because here, if I was to enter the market up here, well, this stock has never been up here, but very briefly, right? So it wouldn't make sense to enter up here unless there is a catalyst, right? And the catalysts usually are good earnings reports. They came out with a new product and or service that is favorable. For example, think Apple iPhone, right? When the new iPhone, iPad, MacBooks, or whatever product, Apple products come out, usually the price is going to spike. Even if it's temporary, it's going to spike because there's this satisfying feeling that, oh, we're getting something new, right? But these are the basics of assessing and analyzing stocks. It does get into more comprehensive things. But for now, I want to actually open the floor up for questions. Does anyone have any questions thus far? Because I know I went over a lot of information and you're probably mind blown with all the information. So I want to answer some questions.
Oh, you went over a lot of amazing things, especially about stocks. Well, let me ask you something. I know that you guys can answer all the questions in the chats and stuff. Absolutely. Is it literally from that point of what you have shown us on here today? Can we take that and start profiting in trading if we don't never know anything about stocks? Well, absolutely. What you just showed us out here today. Absolutely,
right? When it comes to investing and trading, the more information you have, the better and the highest probabilities of being successful and making profits you're going to have, right? Most newer traders or investors, and let me actually define the difference between a trader and an investor. So an investor is typically long-term, right? They're looking 12 months or more, right? Nothing less than 12 months. They're looking very, very long-term, 13, 20 years. They're looking down the line, right? A trader is a little bit less, right? So mid to short term. When I trade, I tend to operate in the midterm, right? Which is usually 1 to 3 months. And there's a reason for that, right? Most economic reports come out on a monthly basis.
Yeah.
Right. Earnings reports come out every quarter, right? So every 3 months. Those are the types of things that serve as catalysts to either boost or drop certain assets, right? And that is where I want to be, right? As a trader, as an investor, of course, I'm going to be long-term, right? Yeah. But you can absolutely apply even the basic principles that I just gave you all today to actually make money in the markets, right? It's just having that information, knowing how to go in and read the chart. And that's where usually most people's problem is. They have no idea how to read the chart.
Yeah,
right?
yeah.
They look at it and they're like, oh my God, what in the world is this? I have no idea what any of this says, right? But once you understand how the chart's laid out, like with the price being on the right side, timing at the bottom, and understanding that the red and green candlesticks represent price going up and down. That's the basics of the chart right there. You now read the charts, right?
Right.
Literally, that's one of the easier parts. Now, when it comes to entry, understand that we don't know where the market price is going to go. None of us knows, right? If any person came up to you and told you, I know the price is going to go here, they're a bold-faced lie, right? None of us knows. Our jobs is to position ourselves, right?
Yeah.
So what I do, and I'm going to go back to the screen real quick.
Okay.
What I typically do is set multiple potential entry points. And I'm going to drop this time frame down to 1 month, right? And hopefully I usually use TradeView for drawing my patterns, but we'll see what we do here, right? So let me see, draw, and let me get, let's say, I could do this one, I guess, the arrow, no, not the arrow, there we go, horizontal line. So when I look at this chart, I'm going to zoom out a bit, right? Because I want to get a better view, right? Remember, this is month, and then the interval is days. That means every candlestick represents 1 day, but the time overall is from a month to month basis. So I'm going to look at where has price been before. That is what I want to look at. Where has price been before, and where is there a high concentration of price? So I'm looking at price currently. It is currently here at 436, and this is my resistance, right? Because this is the highest or all-time high, right? This is the highest price this stock has ever gone. I'm not going to look at anything up there because price hasn't been there before.
Yeah.
Right. So I'm going to look lower in these areas. If I go, let's say to 400, has price been there before? It has. Once, twice, 3, 4 times, right? Because there's a little cluster here. So price has been at 400, somewhere around here, right? Quite a few times. And if I scroll over here, again, price was there briefly before. So what I'm going to do now is put a potential target there, right? So 400, if it drops down to 400, that is going to be a potential entry point for me, right? If price continues to grow above, let me delete that real quick. So if price continues to go further above, right? So it capped here. It capped here. So if price goes above 488, then I would have an entry point above it, right? Somewhere up here.
Okay.
So that is going to be an entry point, right? So keeps resetting me. So I'm going to have above, so up somewhere above the highest. So I'm going to have an entry point here, potential entry point there. And I'm sorry, this keeps resetting me. Like I said, I usually use TradeView for my charting. And then my third entry would be somewhere around here, down here at the bottom. Oh, goodness, it keeps. Sorry about that, guys. But, all right, there. Now, and I'm going to explain why I put these 3 potential entry points. Ooh. Work. Sorry about that. Chart doesn't work with me. Doesn't want to work with me. All right. All right. Let me zoom back up. All right. There we go. So I'm going to explain to you why I have these 3. Because we don't know what price is going to do, I want to put myself in the best position, right, to make money. As I spoke of earlier about those uptrends and downtrends, right, where uptrends is where buyers have full control of the market and they are driving the price up, right?
Right.
Downtrends is when sellers control the market and they are driving the price down. This is usually because they are selling their stocks, right, which is going to drop the price, right? What we're looking for are these areas like this, right, at the bottom or top of that. So at the end of an uptrend is usually what we call a market reversal, right? And this is where buyers no longer can drive the price up, sellers take control, or there's a shift in supply and demand, and now sellers drop the market. Well, we want to position ourselves to be able to capture either a good buy or a good sale.
Okay.
So in this instance here, where there's a nice trend upwards, if there is a continuation where buyers take back control and they drive price up, this is where I want to be. I want to be at the above the highest, because if buyers take control, they're going to push price way above this. right? And for now, it seems like you're at the top, but truly, if buyers take control and this uptrend continues, it will usually be pretty strong and it will continue further up. Well, that means I'm at the bottom of that new uptrend. Okay. So if price continues above, I'm making money there. If price drops, we call that a pullback, right? Price pulls back a little bit, then I can enter the market here when the stock price is a little cheaper, right? And if it does pull back, I enter, the money, the stock increases back up. I now actually make a little bit more money, right? So both of these could be buys, right? Obviously, if I buy down here, I'm going to make even more money if it continues to go up to, let's say it goes up to 600.
Okay.
From close to 500 to 600, well, that's $100 difference. But if I get in down here at close to 400 and it goes up to 600, well, I just make $200, right? So I'm gonna make more money. This entry down here is if the market seems to just drop off. Let's say there's some bad news that Tesla has or whatever the case may be, and it just drops, right? It just drops all the way down here. Well, guess what? I now have a buy position already set for down here. So no matter what happens, if price goes up, I have an entry. If price drops all the way down to its previous support level, I have an entry. And if there is a kind of a wishy-washy part here, I can buy or sell here. So I have multiple different entries that I can now get into the market depending on what this does. Now, remember, we don't know what it's going to do. Yeah. But I've now positioned myself because I've planned where I'm going to enter the market instead of entering at random. Yeah. You see what I'm saying? When you enter randomly, you don't know that, right? You're at an informational disadvantage. So you don't know what you don't know anything. You have a plan. You're just hope, wishing, and praying. And 9 times out of 10, it's not going to go in your favor, right? But if you have a plan, a actual trading plan, and you actually see and look at the information like, hey, well, with an uptrend, a trend continuation, I can make money there, right? Well, now I have a potential entry. If all else fails and this stock drops like a rock, well, guess what? I have a position where I can buy where the price is cheap.
Wow.
You see, I can now buy it where price is cheap. And guess what? It is a high probability that eventually the price is going to get back up there again. Why? Because it's already been there before.
Yeah.
Right. Yeah. This just puts me in fact, it may sound pretty bad, but I rather it dropped down to 200 or close to it. Why? Because I can get it in for cheap. And if it goes back to 4, even 500, I double or triple my money easily. Right now, first things first, I want to make some things clear though. Trading and investing is not by any means a get rich quick scheme. Right. I want people to truly understand that. It does take work. It isn't something where you just, click a couple buttons and think you're going to become a millionaire in a week.
Yeah.
Not realistic, right? It takes real work, and it does take a different mindset of thinking, right? And it takes a control of emotions. Many people, the reason why they do not do so well is because they get emotional, right? They are emotionally attached to their money.
Yep.
And really trading, the reason why I love investing in trading is because it's kind of like a mirror. It shows you who you really are.
Yeah.
Right? It shows you who you really are, and it highlights your faults, right? If you're impatient, it's going to highlight that.
Yep.
Right.
Yep.
If you get easily frustrated or you're attached emotionally to your money or whatever the case may be, it's going to reflect that. Right. And that's where those corrections can happen. And that's a good thing because then it shows you where you can make those corrections.
Yeah.
Right? But
Yeah.
if you sit down and actually study it and learn the skill set, develop that skill set and start thinking of money as tools rather than something personal, it will be inevitable that you will make 6 to 7 figures or more over time. Now, it may take 10 years, it may take 20 years, it may take less than that. It may only take 5 years, it may only take 3 years, right? Everybody's money is different, right? And everybody's skill set is different. But if you take the time to develop the skill set, you will always be able to print money out of the market like a bank.
So does the myth, and I got to give you the Lambo Bell for that, man. I mean, shout out to you, G, for just really going into depth. Shout out to my little brother. This is my little brother, Jay. He's in the building, man. Trader as well, man. That's why he's in here. He's like, yo, facts, man. Like, I'm into this, man.
Absolutely.
Is it the mindset of I don't have enough money to get into the trade and really make profit and really be profitable? Is that a misconception? And I'll get into a couple questions that.
Absolutely. Not necessarily, right? There are some platforms, for example, Robinhood, and not to promote Robinhood or any other platform, but there are platforms where you can actually invest small bits of money, right? The beauty about Robinhood is they have in fact, Robinhood was one of the first that did this, which is why so many people came to it. They fractionalized ownership of shares. So what that means is, for example, look how Tesla is worth $436 per share, right? Well, not everybody can afford to pay $436 to get that whole share, right? So what Robinhood did, and I gotta admit, was one of the best business models at the time, was they said, okay, we will broker. Robinhood would buy the share, and then they will distribute that share into fractions. Right. So you can put up $4, $10, $20, and you would own a fraction of that one share. So they took that share and broke it down. So you can still make money even with a little bit of money. It may take a little longer. Right. But you can still make money with it until you build up to where you can buy a whole share.
Yep. And I think that's what people were saying. People kept saying, I don't know if this is profitable. I know that they're making money in stocks. I know you can profit. And I think that people had the misconception that I have to come in with a whole lot of money to make a lot of money. Right. And tell people about that. Just as much as you come in with a whole lot of money, you can lose a whole lot of money.
Absolutely. That's absolutely. Because it's you always hear that notion, what you said, right? It takes money to make money. It takes a lot of money to make a whole lot of money, right? The flip side of that is you can lose a lot of money as well. You can lose a lot of money as well. Listen, I have some stories, right? I'm gonna give one of the biggest lessons, is one of the biggest L's I've ever taken. I don't believe L's as loss, right? I believe it as lesson. I take it as a lesson. But one of the biggest lessons I took was in Bitcoin. I bought Bitcoin when it was at $1, right? And I bought 1,000 of them at the time. So I'm like, $1,000, it's $1. Let me get 1,000. I actually forgot about it. Now, I wasn't as savvy as I am now with things, because I would have done a lot of things different, a lot of things. But I made money off of it, right? I made quite a bit. It went up to somewhere about $600-700 when I got out of it. But I made the biggest mistake there. And
Yeah.
the biggest mistake is I pulled everything out instead of taking and didn't put anything back in. What I
Yeah.
should have done was take out and put more back in.
Yeah.
And because I didn't do that, Bitcoin eventually rose to what it is now.
Oh my God. You're over 100,000. Like, oh God. Yeah.
So if I would have kept it, I would be sitting on over $100 million right now. So
Yeah.
I take that as $100 million loss, right?
Yeah.
And it's $100 million lesson.
Yeah.
The biggest lesson. So understanding those losses, right? They can occur, right?
Yeah.
And oftentimes this happens because we don't have a good plan,
Yeah.
right? And it's when you don't have a plan and you don't know what you're doing, you're kind of just doing things at random, right? And it's not going to work. It's that doesn't apply for like you try to do anything. It doesn't matter what it is. If you don't have a viable plan, it's not going to work.
Facts.
Right?
Facts.
It is just not going to work. And that is usually the problem when it comes to investing and trading. First, people don't understand the information. Two, they have zero planning.
Right.
Right. And as a result, they lose, and they lose a lot, and they lose consistently.
Yeah.
Right. But once you have a good plan, you have the information and education, and you develop the skill set, you will make money consistently.
Yeah. I hear now this is what I want to hear.
Mm-hmm.
You stated that. Can you make money consistently?
Correct.
Right. And let's talk about profitability versus consistency.
Okay.
Right. And let's talk about where people say, like, and you said that earlier, like, hey, I made a whole lot of money, but have you really been consistent?
Correct. So with trading, as opposed to investing, trading, I typically trade the things I trade is stock options, right?
Yep.
And options are derivatives, right? Derivatives means that it derives its value from an underlying asset, right? Being that it's a stock option, the option gains its value from the underlying stock.
Yeah.
Okay. Right. And those are the things I trade primarily, right? Stock options and futures. So when it comes to being profitable, it takes consistent wins. Now, understand their losses is a part of the game.
Yeah.
It's a part of, you're going to take a loss, right? If you are fearful of taking losses, you're not going to do so well here.
Yeah.
Right. Because that's part of the game.
Yeah.
But the key is to have more wins than your losses. And that takes being consistent, right? And understand as well, you and I, we cannot dictate, or anyone can dictate how much money we're actually going to make out of the market.
Yeah.
Right. So no one can go in and say, I'm gonna make $10,000 every single month. Right. Doesn't happen that way. It doesn't work that way. You get whatever the market gives you.
Yep.
Right. Yep. That's it. Right. And now, if that is $100, $10,000, $2,000, $20,000, that is what you take. Right. And if you're able to do that consistently, meaning you're able to make profits over a period of time for 3 months, 6 months, 12 months, then, and you're green, your profits outweigh your losses, you're now a profitable trader.
Yeah.
Right. You are now a profitable trader. Even if it's only $100. Let's say you make $100 every single time, but you've made more than you've lost. You are now a profitable trader.
Yeah.
And it only scales from there, right? Just continue doing what you're doing in terms of discipline, and it will start to scale.
Yeah.
Rather quickly, actually. Rather quickly.
Yeah.
And the biggest thing with people and why they call it gambling is because of day trading.
Yeah. Okay.
So day trading is where you buy and sell in a asset within the same day, or intraday. So intraday meaning within the day.
Okay.
So let's say the stock market opens at 9:30, it closes at 4 p.m. Let's say I buy a stock and then I sell it. I buy it at 9:30 and I sell it before 4 p.m., right? That's day trading, because I'm not holding it for a longer period of time. I'm buying it and selling it within the same day.
Right.
Statistically, it is not sustainable for a long period of time. In fact, here's a statistic for you, and I bid anyone to go look this up, right? 90% of traders will lose 90% of their money within the first 90 days of them depositing their money into a brokerage firm. That's a horrible statistic.
Woo! Hold on. Time out. 90%?
Correct. And this is day trading. This is not
day trading.
This is day trading.
Long trading and swing trading.
Right.
And all of that.
Right. That's not swing trading or, longer investments or REITs or things of that nature. This is day trading. 90% of day traders will lose 90% of their money within 90 days.
I heard that the day traders, and we all heard that all the day traders are the ones that make all the money, and swing traders and scalpers, they don't make no money out there.
Absolutely not. And the reason, they make money, but they don't tell you how they make their money. Okay. And that is the marketing ploy. And they're a bunch of charlatans. I said it. Whoever has a problem with it, I have the receipts and statistics to back it up. Right.
Yeah.
And to give people a little history, I've participated in the market for about 20 years now. I know I don't look it. Yeah. No, I do. You do. No, I do.
No, you look, man. You look like, man, you're every bit of 25, brother.
So I started with ETFs. That was my bread and butter, right? Yeah. ETFs was my bread and butter. And then I ran into a guy by the name of Dr. Chris Cole. There was a group of brothers that had started a good thing, and I wanted to learn how to trade, because he knew how to trade. He did all different manners of trading. So he taught me the trading. He introduced it to me, and I was like, wow, no wonder why people generally don't understand anything or know anything about this. It's kind of that open secret type of thing. It was like, wow. Then I furthered that training with Anton Kriel. So Anton Kriel used to be vice president for Goldman Sachs, right? He was also a trader for Goldman Sachs in the operations of market making. So market makers are the ones who facilitate trades. They are the ones, essentially the middlemen, right? They line up buyers with sellers, right? So they're in that in between, right? There's always a market maker involved. He was the one who polished me up to the professional standards, right? And educated me on why day trading and those types of things don't work, because statistically, it's not meant for long term, right? It's all a marketing ploy, right? You will hear so many ads in YouTubes and different gurus who will say you can make X amount of money in the market. All you have to do is draw a line on a chart. Do this. Hey, if you buy my course, 99% of the time they are selling you something. That is how they're making their money. Okay, they're selling you a course. They're selling you a strategy. They're selling you an indicator of some sort. They're selling you something, access to a trade room, one-on-one consultations. They are selling you something. That is how they make their money. I would say the vast majority of them don't even know how to trade. Yes.
Wow.
And unfortunately, this is the business, right? This is and I wanted to go over this in the Wealth Conference. This is the part of the business that most people are not aware of. And it's a business.
Yeah.
Right.
Yeah.
And you will hear a lot of people say, well, man, this platform or that platform, man, they just trying to take my money. Absolutely.
Yeah.
Absolutely. Right. Absolutely. Yeah. Because there's a lot of conflicts of interest, and there's a lot of things business wise that gets people roped up into a cycle.
Yeah.
right? They get caught up with, and the newest thing now is the AI trading and the bots and all of these.
Literally, this is the question that Ken Haney asks, and he asks this question.
Manual training investing still be sell versus so algorithm trading and AI trading. First of all, it doesn't work. I know that's disappointing to hear. It doesn't work, right? Number one, you're never going to beat out, because keep in mind, you are competing with institutions and institutional traders. First of all, you don't have enough money. And your systems or trading bot, whatever it is not going to compare to theirs, right? They can put literally billions of dollars into their AI system compared to what you can. You're never going to beat them. Right. And the goal is not to beat them, but trade along with them.
Yep. I say that all the time.
Right. You got to trade along with them. And with the trading bots and AI, if you aren't tech savvy, you're not going to know how to program it to trade along with individuals.
Yeah.
Right. So you're going to waste your money. Again, that individual knows that, and they're just trying to sell you a product. The product was the AI bot. So you could pay $400 or $500 for the bot. They walk away with good money. Well, imagine if they get 10,000 people. They just,
oh my goodness.
Right? Imagine they get 10,000 people to fall for that same thing. They just walked away with a pretty penny. And they didn't trade a single instrument. Right? But these are the things that people get caught up in, because that is what gets marketed.
Yeah,
right. That is what goes out there, and day trading is just not statistically sustainable over a long period of time. Now, can you make money in the short term? Absolutely, you can, but that heavily depends on volatility.
Okay.
Right. And volatility is the fluctuation of price, right? And one of the charts that you look at is the VIX chart, and if I can still share. I will bring that chart up, right? If you all can see my screen, give me a second for this to load. So this is the volatility chart, otherwise known as the VIX chart, right? When volatility is high, that is where you will make more money in the short time frames, right? So you see these periods right here where it's extremely high. See that? It's in the 60s, right? This is where you will make money in the short term, right? Where you can go down into those short-term time frames, a week, day, intraday, and actually make money, right? But as you noticed, it's not a lot of times where that happens.
Yeah.
Right? Yep. Most of the time, what happens? Volatility is pretty low. It's down here, right?
Yeah.
This is where you would initiate your portfolio management. So as a trader, you're going to be a trader and a portfolio manager, right? Because you're adding things to your portfolio to grow it. Most of your activities, about 80%, is going to be portfolio management, right? 20% of it is actually going to be trading. So you can make money in the short term. You just have to know when, right? And this time period was during September of 2024 when this time period happened. And it didn't last long, right? It only lasted about a couple of days and then it dropped again, right? This one, which was more recent, was somewhere around March, right? Lasted for most of March, about a good 2 weeks in March, and then it dropped, right? And then it's back down here, right? So you're not going to see a lot of opportunities to make money in the short terms in terms of day trading, right? Wow. So this is why it's sustainable. There's what I think 260 trading days in a year. If you were to trade every single day for those 260 days, it is guaranteed that you're going to lose money. All of your money.
As a day trader.
Right? As a day trader, yes. As a day trader, right? eventually you're going to go to zero, even if you make money. And this is where the marketing ploy comes in, because of the language, the verbiage they use. You can make money in the market.
Yeah.
Sure you can. Yeah. Right? You can go in and make $1. You can make $2. You make $10, $100, right? But that does not mean you are profitable.
Yeah.
It just means, for example, if I go in and trade one time,
yeah,
and I made $100, I made money in the market.
Yeah.
I made money in the market.
Yeah.
Right? But can I do that consistently?
Yep.
Right? Can I make $100 consistently, or can I make money in the market consistently? And that is where day traders will fall off. Right? And if anybody, I challenge anybody on this call, if any day trader who's on this call, or anybody who encounters a day trader and they say, well, I'm a 6-7 figure day trader and I do this, I've been doing this for however long, ask them one question. I guarantee they will shut up from that point on. Ask them to see their trade history.
The trump card, right?
Yes.
I got you.
Exactly. As to see their trade history, I can guarantee you they will not be able to present it. They won't be able to present it. And they're going to know that they're full of crap. Immediately when you say provide your trade history, right? Because if you're profitable, you got receipts.
Yeah. Success has receipts. I always say it, right?
Always, yeah. Right? Listen, there's always going to be a trail for whatever you do in the markets. Always, right? And when you ask that person, well, let me see your trade history. If you're profitable, let me see your trade history. And I can guarantee you that none of them will be able to provide that trade history, because they know they either never traded before and they're only making money from courses and ebooks and all these different side products, or because they're actually not profitable. And that is where people, again, they don't know these things, so they jump in because, again, it's not really taught in the homes. It's not really taught in schools unless you go to college, finance, right? Not everybody's good at math, right? So if you don't understand or know these things, you're going to listen to hey, I'm trying to get in this. They sound like they know what they're talking about. And then, hey, buy this course. And then you buy the course and you realize, I don't understand any of this, right? I'm still losing money.
Right.
You got caught in it, unfortunately. And that's where most people stop. Here's the problem with that. There's a scale system that we use in the business, and it goes from unconscious incompetence to conscious incompetence to competent to conscious competent, and then unconscious competence. I know that's a mouthful.
That's a whole mouthful.
The unconscious incompetence is that you don't know what you're doing and you are not aware that you don't know what you're doing. Right. And this is where most day traders are. They're at that bottom level because they don't know what they're doing, and they don't know that they don't know what they're doing. Right. And you will have a lot of day traders who will argue up and down. I know that I make money in the market. I do this. I made blah, blah, blah. Yes, but you're not profitable. You're not consistently profitable. If you were, we wouldn't be having this conversation.
Yeah.
You see, so again, that trade history will stop them dead in their tracks, right? So, well, okay, you're profitable. Let me see your trade history. Stop them right in their tracks.
And literally, 20 years, you've ran across no one that has really had that successful day trader. Yeah, for day trader.
There's not going to be. Even at the professional level, It is very difficult. There are successful traders, but it's only like 1 to 2%. It's not a lot, even amongst professionals.
And they're probably not the ones advertising it too either.
Exactly. I'm glad you brought that up. Yes. I'm glad you brought that up, right?
Yeah.
The ones who are successful at it are not advertising it.
Yeah.
Okay. They're not creating ads to buy their course. No, they're quietly making their money.
Yeah.
And executing their strategies.
Yeah. Yeah.
Okay. Because they don't need to sell you a course.
Right.
They don't need to. They're successful, right? Yeah. They don't need to sell you a course or anything else, right? You see? So you immediately, once you know those things, you immediately say, okay, you're trying to sell something. What is it you're selling?
Yeah.
And
I would pull a coach and be like, yo, sell me what kind of course you're trying to sell. How much is your course?
Right.
I want to get to the no faster so you can go out your way at this point. You know, because
you can have fun with it at that point. Especially when you can have fun with it. Like, oh yeah, okay, you do this. Okay, well, all right, what is in your course? And then you start asking certain questions, and I love to do this, and it's kind of probably bad, but I kind of tease a little bit like I don't know anything. And then they try to, all you got to do is get this indicator and do this. And it's like, yeah, I'm like, okay. And then once they feel like they've got me roped in, that's when I start hitting them with the questions like, well, what about the historical volatility? What is the performance? How do you measure the parameters? And you get into all the stuff, and they're like, okay, this person really this person really knows what they're talking about. I find it fun, but I enjoy giving this type of knowledge for free because there's enough money out here for everybody. Right?
You're right.
Everybody. I don't need to sell anybody anything. I don't need to come up with any scams, any schemes, or I don't need to do any of that, right? Because someone took time out of their busy schedule to teach me up to the level that I am. And I just want to give that back, right? Because my purpose in life is to transform households, right? And trading is one of the best ways, and trading and investing is one of the best ways to do that.
Yeah. Well, you put on an amazing show tonight. You know, I really want to thank you for that. And answer questions. Let me know if y'all got any more questions before my guy gets out of here. Taylor says EKG machine. You know what that is? I don't.
EKG machine? Are you referring to the actual EKG machine?
That's what I'm thinking. Ms. Ingram, let me know if that's the actual EKG machine. Out there, because we would want to know. Is that what you're referring to? Yeah, trading will probably have you on the EKG machine. Let's get down to some of this, man. Hi, IC. Miss you coming in. Good to see. 20 years, Goldman Sachs. Yeah.
Nike, love it. By the way, Goldman Sachs has the record of producing the best traders in the world.
Get the heck out of here.
Yeah. Goldman Sachs which is why I've been so blessed to study under Anton Krill, because coming from the training that he came from in Goldman Sachs and the accomplishments he had, and he polished me up to that professional level. Yeah. You can't. That's something you just don't get everywhere.
Yeah.
Right. Yeah. And that came along. He opened my eyes to a whole lot of things once it got to the professional levels, and it was like, wow. This thing is so much deeper than what I thought.
Right.
And he really, really polished up my how I thought about. I was like, wow.
Yeah, I love it.
Yeah.
Shout out to Nikolai, and shout out to you. Thank you, Nikolai, for popping in. First time, Nikolai. Appreciate you, my guy. That's my guy right there. Blue Sky is in the building. Blue Sky, definitely. This is all her lane of trading, and I'm trying to tell y'all this right now. I love it. I love it. I see showing love. Candles formation. She said, I thought the candles looked like an EKG machine when I first started.
That's an interesting statement as well, because I said this on the boat, on the yacht, when we were at the Wealth Conference.
Yeah.
And I said that, and I can't take credit for this. My mentor, the mentor who trained me, gave me this, and he said, money is the physical evidence of the transfer of energy. Right. So for her to refer to it as like an EKG machine is very similar, right? Because there's a reason why our money is called currency, right? It's supposed to flow. It is energy flow. So that is a great analogy for her. It was actually very perceptive of her to pick that up, right? How it represents.
Well, she be on them charts. Ms. Ingram be on them charts. She don't be playing, man.
Absolutely.
So shout out to Ms. Ingram being on them charts. Listen, G, we really want to thank you for tonight. I mean, literally, this man poured 2 hours out of his time, his wisdom, and expertise on everything. Let the people know how they can stay tapped into you. And the people don't know this, but I'm starting this, and we're going to talk about this. I don't know if it's the next week or the week after. Lambo, we're going to start trading every morning live on the channel. So for those and everything who want to learn to trade, who want to learn how this thing really goes, if it's just an hour or so,
absolutely,
being on there, we're going to do live in the morning trading on the Leverage Show. So I really want people, man, to really get this, because this is something that's really going to help them out.
Absolutely.
So you definitely, G, I got to have you there, man.
Absolutely.
To definitely help lead and guide, man, the people. So we'll set up a time and we'll kind of know exactly when it is. But in the morning times, we're going to go live and we're going to really do some amazing things right here to help the communities out. But let people know how they can get a hold of you. They definitely want to really trade and learn some things because G does teach this, and I'm telling you this right now, he is surgical out here teaching this thing. So let people know how they can get a hold of you, G.
Yeah, you can get a hold of me on Instagram at Achilles De Leon. ACHILLEZ _De Leon. I spelled my own name wrong. Look at that. What my name's here. You can look this name up and you'll find me on Instagram. Shoot me a message. Let me know where you came from, who you are, and then we can chop it up, man. We can share ideas, and that's the goal of this. So we can all make money and transform. Thank you, Lambo. Yeah, so we can all transform these households, man, because that's the goal out here.
That's the biggest thing, man, we want. Again, this is it right here on the screen. It's spelled just like it is, ACHILLEZ _DELEON. All right? Make sure you guys go and definitely follow him today on IG. And definitely put a DM, man, and let y'all set up a time, set up a Zoom call or whatever, man. And y'all get with my guy G for just really, man, I'm telling you, some really one-on-one. G, you did an amazing job tonight, man. And I really the information and that you set out, Lambo was like this, like, go, G, go.
Appreciate it. Blessings, man. Blessings. I just want to be a servant to others, man, because in the world, and don't get me wrong, I understand capitalism, but in a world where a person is less likely to help another person without expecting someone back, I want to be personally that change, right? That's what I want to do, is help, because you don't need to expect something from anybody, right? And that's my purpose. I just want to give to those who are willing to receive. That's it.
Well, man, you're giving. You get that Lambo Bell. You give to those
Appreciate it, my brother.
because you killed it tonight and set us on fire, man.
Appreciate
and we're excited. I literally see everybody. Shout out to Issa, man. He's a trader as well. Issa said, "Thank you, Mr. G."
Thank you.
So definitely, I know he's learning. So he's you guys that know the major connection and everything. I know Miss Ingram. She's just in the building. She's like, "Thanks, G."
Thank you.
Shout out to that. Shout out to my amazing wife. She definitely sees.
Thank you.
Mrs. Johnson being in the building,
Absolutely.
man. And all the prayers, all the love. Listen, we really thank you guys, man, again for tuning in, keeping us here, man, right here and rocking out with my guy G. And literally, 2 hours. I know y'all sitting there looking like Lambo. Yeah, no, it's gonna get surgical out here. All right, he ain't trying to come out here and explain nothing for no 15 minutes. He really got in detail and talked about some of the things that y'all should be on the lookout for, but that will make you successful in your life. You guys make sure y'all please go and follow my guy today on IG, man. All right, it's right there in the screen, man. Let you know. Send him a DM. Tell him and everything, man, how amazing he is. But schedule some time to go one-on-one with my guy G, and y'all sit down there, man, and really gain a trade that will blow your mind, a skill set that'll blow your mind for the rest of your life, and definitely be able to help change your lifestyle. Again, man, I truly want to thank my guest, man, of honor today. G, this better not be your last time. I know I told
Absolutely
you.
Not. Absolutely not.
Trading, so I would love to have you on the live training in the mornings, man, with Lambo when we start that, and really allow the community, man, to really start moving forward in that arena, man, because that's been an arena we've been trying to get into consistently for so long, but everybody kind of doing a little bit of everything really is just, I really don't really want to go into it. It's kind of all over. You see it, people selling courses, and then the investments crashing and burning and stuff like that.
Correct.
We really
I appreciate you for having me here. It's been an honor. It's been a privilege. And trust me, this won't be the last.
Yeah. Won't be the last, man. Thank you for that. Make sure y'all go ahead, hit the like, subscribe button. If you guys are not like, subscribe, hit that bell button, man, as well. The Lambo Drew TMT, man, on YouTube every Tuesday and Thursday night, 8 p.m. Eastern, 7 p.m. Central. We are right here at this station providing value. Tonight, we had the honor to definitely welcome our guest of honor, my guy G, right here on the Leverage Show. Till next time, everybody, have a great night. Thank you guys for tuning in. Can't wait to go ahead and see y'all, connect y'all to the next time. We love y'all. Take care. Me and G, guess what? We out of here, y'all. Later, y'all.